Hello and welcome to this Payday Super webinar. And yeah, we'll get straight on into it. We've got a fair bit to cover today, and as a lot of you have asked where the legislation's at, it is still up in the air. So we're going to be covering the concepts today, but they are subject to change, but shouldn't be changing all that much. But there is a little bit of confusing content, and so just straight off the bat, I'm just the messenger, so please don't shoot me. Yeah, we don't make this legislation. We don't make the rules. We just try and communicate how to make it work within the software. So I guess congratulations to everyone for coming along, even though this is a little bit up in the air. It is something that as a software developer, as part of the industry associations that we're part of, we do ask the government to give us at least 12 months from finalisation of legislation to rolling out changes. That isn't likely to be occurring on this occasion, but the ATO have still asked us to sort of be proactive with our communication and get our Sybiz Visipay customers ready for the change. So let's get into it. So we're going to be covering a few things today. So we'll obviously start with the star of the show, which is Payday Superannuation. We'll also talk about the employee onboarding, and then SybizSuper is also relevant as well. So there's been a lot more interest in the SybizSuper product. People were signing up for that ahead of Payday Super. And we still, I guess, I guess the encouraging thing there is that we have the building blocks to put together a seamless Payday Super experience for you based on what we know at the moment, but just that caveat that yeah, there's still a few unknowns to be clarified once the legislation gets through Parliament and all the little bits and pieces get clarified by the ATO and Treasury. So, but before we get on to the official agenda, there is something else that sort of crept in that some of you may have seen, and this is only relevant to those employers with employees that have STSL, or some people still refer to it as HEX, and it has been referred to as HELP. And there's a number of other little student loan schemes that fall under that STSL banner. But yeah, something that's a little bit awkward in terms of the timing of this change. But essentially, long story short, the rates for STSL are going to be changing on the 24th of September 2025. And the calculation method is also changing. So essentially, it is reasonably easy to contend with that within Sybiz Visipay. So there will be some action needed. And this is, I guess I should stress that it's only employees that are subject to STSL that you will need to worry about. Everyone else carries on as normal. But yeah, essentially, because of the changing calculation method, we need to change the way that Visipay handles the actual calculations. And that means that we'll be merging the STSL into the tax scales and essentially retiring the existing separate STSL tax scales. So that will necessitate a bit of a change from your perspective. So we will be publishing probably in the next week, but definitely before the 24th of September, some new tax scales which will automatically be downloaded into your system. And then you just need to trigger the update when those new tax scales come through, and I'll talk about that in just a moment. But essentially, just covering off a few of these points, we do have a dedicated page on our website with this content as well, so don't worry about taking all of this information down at once. You can certainly get to this from our website as well. But essentially, you will be wanting to leave the apply STSL flag checked for the employees that are subject to STSL, because that is used in STP reporting through to the ATO. If you've only got a handful of employees, once you do have the new tax scales on board, you just essentially tick and flick those employees across to the equivalent STSL tax scale. So we've made it nice and simple. So most people in Australia are on tax scale 2. So there's a tax scale 2-STSL. And so for those that have the STSL applies, you just need to change their tax scales before you do your first pay run on or after the 24th of September. So just on that, the thing to clarify here as well is that when the new tax scales get put into your system, they kind of sit in a little holding pattern until there's a triggering event. So normally that would be when you traditionally what happens is the new tax scales come in from the 1st of July, and so when you roll your end of financial year, you get a prompt to update the tax scales. But with this particular situation, it's quite bizarre to have something in the middle of the month. So for some people where you do have a pay run that, or rather your first pay run on or after 24th of September is before the end of September, so before you roll into October, what you'll need to do is you'll need to do like a little dummy pay run. So go into process pays, you'll get the prompt to say, do you want to use these new tax scales? You say yes, and then exit out of that pay processing, and then you can go and assign the new tax scales to the relevant employees. If you've got lots and lots of employees, then that are subject to STSL, then use the export import functionality within Sybiz Visipay to do that update. So yeah, it's a little bit awkward, as I said, being mid-month. And I guess the other thing to really emphasize here is that, and we've sort of discussed this with employees here at Sybiz that are subject to STSL, that they know that they're going to be getting a bigger paycheck or bigger take-home pay in the coming weeks. So they're going to be on their toes looking for that reduction in the tax amounts that are being withheld. But because it's going to be the experience of most people, I should just really emphasize that one of the things that we are doing is we're going to be zeroing out the existing STSL scale. So they'll still be there as we sort of phase through this process. And so if you fail to change the tax scale to the STSL applies, what's going to happen is your employees are going to get more take-home pay. They're probably going to be none the wiser, but you're going to be under-taxing them essentially, and then they're going to get a big nasty surprise at the end of the financial year. So just because someone's pay reduces, their tax reduces and their take-home pay increases, doesn't mean that you've got it right. So they're probably not going to tell you that, or they may not even notice if you've got it wrong and kept them on the original tax scale too. So just be very careful with your process, review your process, and make sure that you have selected the STSL tax scales for those that apply STSL. And just the final point on this as well, you won't actually see those STSL tax scales just yet. They'll be published at a later date and well and truly before the 24th of September. So as I said, we do have more information on the website about all of this, but yeah, we just want to use every opportunity to let people know what is going to be coming. Okie dokie, on to the star of the show, Payday Super. The legislation is not finalised. We did get some draft legislation around April, May, I believe it was. And even in the last couple of months, some of the concepts have changed. And I'll talk about that. And we did cover a little bit on Payday Super in our end of financial year webinar, and some of the bits and pieces have changed since that point. So I'll make a point just to sort of emphasize what those changes are since we last covered it very briefly in the end of financial year webinar. So yeah, just the big disclaimer, this is still up in the air. Conceptually, we should be right to not confuse you too much in terms of where things are sitting now. Should be very, very close to the final product. But yeah, just a few things that are sort of creeping through. There has been some lobbying by Sybiz through the DSPAN's industry association to get the whole Payday Super deferred for at least a couple of years. That's essentially been drowned out by the lobbying of the superannuation fund industry, where they've put a lot more pressure on Canberra to make this change occur from the 1st of July 2026. They're driving on the noble cause of making sure employees get super into their accounts, but I think the super funds want the money sooner, and that's why they're driving it so hard. We've also been told that there's unlikely to be any scope for deferral. So as we've done things like STP and STP2 and even going back to SuperStream, there were deferral programs in place, but the ATO has basically said that there's no scope for deferrals. There was also some input into the process to suggest that perhaps certain employers could sort of be the guinea pigs and try the process first and then roll it out to other employers, but that's not something that the ATO and Treasury, etc., have entertained. But consistent with things like STP and STP2, the ATO are likely to work with employers that don't get it right to start with, and help them get it right rather than penalising straight off the bat. So that's just the advice that we've been given, and we're just passing that on. And as I said, a couple of things have changed since our end of financial year webinar. We were hopeful that it would be delayed because that was the information coming back from the government during the consultation phase, but that was shut down pretty quickly. So unfortunately, it does look like it's happening 1st of July 26. And in the draft legislation, there was this new concept of qualifying earnings. And initially, when that was rolled out, the ATO basically said, oh, look, that's probably something that's not going to see the light of day in terms of the punters won't, or the employers won't sort of have to grapple with that concept. But as we've got closer to the final legislation, etc., it is now clear that qualifying earnings is something that we're going to need to confuse you and give you headaches about. So again, we're just passing on the message, but we'll do our best to help you understand these concepts as we go through these slides. So let's talk about ordinary time earnings and qualifying earnings. So OTE, the big key thing here is that conceptually it's unchanged. So it is, I guess, getting more prominent in terms of you do need to sort of wrap your head around OTE and understand what it is. And in most cases, it is going to be pretty straightforward. So essentially, when you upgrade to Sybiz Visipay 2510 or above, so 2510 is out currently, we do have a flag on the pay items to flag them as OTE. And generally speaking, so what we're basically going to be doing there is if you flag the pay item as superannuation applies, we will then tick the OTE box for you. But you may be paying super on some things that you don't need to pay super on, so you'll need to uncheck the OTE flag in that case. But it is also a good opportunity for you to wrap your head around OTE and review to make sure that you are applying super to the correct pay items. And so with that, the ATO has updated their information on their website regarding OTE, and there's a link on these slides. You'll get a copy of these slides. You can also Google it and get to that link as well. And with qualifying earnings, there's not a lot in terms of information about that at this point in time, because it's only just in the last couple of weeks that it's been realised that qualifying earnings is something that's going to need to be understood. And in most cases, OTE and qualifying earnings are going to be exactly the same. But there are some exceptions, and so a couple of those exceptions are if you are having employees that are subject to the maximum super contribution base. So for the current financial year, that's those employees earning over $250,000 a year. Then anything in excess of that will be still deemed OTE, but it won't be deemed qualifying earnings. So the qualifying earnings will cap out at that 250,000. And the flip side is under 18 employees working less than 30 hours a week will earn OTE, but it won't be deemed qualifying earnings in that scenario, because super won't be paid on that, or it is not payable on that. So yeah, so that's just pointing out those a couple exceptions there. So if they don't apply to your organisation, then yeah, you're pretty safe that OTE will equal qualifying earnings. But there is a but that I'll get to in a moment as well. And yeah, so essentially where the qualifying earnings concept comes in, it's going to be reportable through STP. So we'll have a later update in the software. Once the legislation has been finalised, we'll update the software to cater for that from an STP point of view. But essentially, qualifying earnings multiplied by the super guarantee rate equals your superannuation liability. So what that means from the ATO point of view is that if you fail to meet your obligations on time, and the timeframes for Payday Super are a lot stricter than the current timelines, and I'll talk about that in a moment as well. by providing this information to the ATO through your STP2 reports, that means they'll have the information they need to whack you with the super guarantee charge. Yeah, so that's why they want that additional information. And so that's a little bit different to what we were talking about at the end of financial year webinar as well. So again, could be subject to slight changing, but it is most likely going to go along in this particular manner. Okay, so again, just sort of isolate, and as I do sometimes with these presentations, is we do repeat information in different ways just to sort of crystallize it. So looking at how QE is different to OTE. So QE basically includes all payments that are OTE under the Super Guarantee Administration Act, but it also includes information that is, amounts that aren't currently OTE. So yeah, so the key differences are that QE includes all commissions. So at the moment, if someone is earning commission, again, this is one of those edge cases where QE and OTE aren't necessarily equal. So if someone is earning a commission or bonus based solely on work performed entirely out of ordinary hours, that's not OTE for the purposes of the Super Guarantee Act, but it is going to be included in qualifying earnings and subject to superannuation. So again, that's pretty much an edge case, and it is a bit of a under STP, that particular commission or bonus, rather than being reported as a commission or bonus, is actually reported as overtime. And yeah, so it is a little bit different to what we're used to, because generally overtime and anything related directly to overtime doesn't attract super, but in the case of bonuses and commissions for work performed entirely outside of ordinary hours, that is going to be attracting super going forward. So I guess that's one example of where qualifying earnings could be greater than OTE, but in most other cases, OTE will equal QE. And there are also in the SGAA some different classes of people earning money that aren't necessarily employees, but the SGAA includes them as employees for the purposes of super. We'll talk about that a little bit as well. So that includes things like directors of a company. So currently that is subject to super anyway, and all of these categories are currently covered by SGAA, so they would normally be getting super, but yeah, it's just yeah, clarifying that particular section under the SGAA. So nothing has really changed in that respect. From an exclusion point of view, yeah, again, just to sort of isolate this, payments that are the reversal of a salary sacrifice superannuation contribution, that's a pretty edge case. I've talked also about the under 18s doing less than 30 hours per week and the amounts in excess of the maximum super contribution base. So hopefully your headaches aren't too bad as yet and you're not too confused, but planning ahead, as I said, Sybiz Visipay 2510 is out now, and yeah, so we've added the flag to designate the OTE. Also, you've got the link to the OTE content on the ATO website, so I think that was updated around about the 12th of August. So they went through a consultation with us in the industry and gave us a bit of a sneak peek. We gave some feedback and they've refined that further. It's probably going to be an evolving document, so it's that particular web page. And yeah, I should just point out as well, I mentioned this a couple of times, but the ATO say to us, please don't republish that information on your website, rather give links from your website to those pages, because it is a moving target, and that way there is just that one source of the truth. So yeah, so just bear in mind that that information is changing, and we're not republishing it based on the request of the ATO. We're just giving you a link to go directly to the source. And so there won't be a flag as such for qualifying earnings. Basically, you'll flag something as OTE, and then we'll look at the context of the payment and decide how much of that OTE is QE. So again, that's just those edge cases of the excess of maximum contribution base and the under 18s. Review your director's fees and your commission pay items. They should already be super applies apart from those overtime ones. But those overtime ones will need to get changed. And again, that change, that's not until the 1st of July 2026, possibly later. You may also want to have a look at your pay frequency. So we have seen a number of employers, but moving from say fortnightly pays to monthly pays, which will just make it easier in terms of the admin. Plan your move away from the small business superannuation clearinghouse. So this was one of those clues that kind of let us know that the ATO wouldn't be budging on the 1st of July 26 commencement date. They've announced a couple months ago that the small business superannuation clearinghouse would be closing. They are actually closing it for new registrations from the 1st of October this year. So just bear that in mind as well. And so essentially this is just the same slide as we covered in the end of financial year webinar, but updated with information. The information isn't as advanced as we had hoped. The timing of this webinar on the 12th of September, we were meant to have an industry meeting 2 days ago on the Wednesday the 10th, but that didn't occur. That's been deferred for a week, so I was hoping to have some updated information to roll into these slides, but we decided to continue on as is anyway. Just repeating the bits that we covered off earlier. 1st of July 26 commencement, super gets paid at the same time as employees are paid. The clearinghouse is getting closed, blah, blah, blah. One point that we haven't covered is that the maximum super contribution base up until Payday Super has been reckoned on a quarterly basis. That is now being changed to an annual basis, which makes everyone's life easier, but you will need to just be aware of that. More information will come out as to how to manage that transition as you roll from the current financial year into the next financial year for Payday Super. And qualifying earnings is going to be reported via STP2. So that's the one key change or the main change from our end of financial year webinar, where we said that ordinary time earnings were to be reported via STP2. That's now no longer the case. We can still report OTE. We haven't up until now. We've reported the super liability, but we'll continue to report the super liability and the qualifying earnings under STP2. Just a little by the by for what's happening behind the scenes is that as the clearinghouses pay to the super funds, they'll be often using the new payments platform. So for people that use things like OSCO and PayID, that's the new payment platform, the instantaneous payment that comes through. So around about 2030, we'll be saying goodbye to the old ABA files and things like that, and it'll all be the new payments platform. But behind the scenes, from a Payday Super point of view, those clearinghouses will be sending the money to the super funds with using the quicker mechanism of the new payments platform. And this hasn't changed, just emphasising the timing for Payday Super. You do need to make sure that those funds hit the member accounts within 7 calendar days. That's not business days, so that's a little bit awkward, especially when you look at things like Easter, that gives you a lot tighter time frame. And then super funds have 3 days to try and match those funds to members, and if they can't match them, they've got to refund it back to you. And then that gives you 4 days to make sure that the funds hit member accounts, which makes life even more interesting. And again, we're just the messengers. And just a couple other little bits and pieces as well. There are some changes around the super guarantee charge as well. It's not as punitive as it once was. yeah, so there were a lot of penalties associated with it, but that's not necessarily going to be the case going forward. So I'll leave you to sort of do your own research as to what that means, because hopefully it shouldn't apply to anyone, because you're all doing the right thing and no one gets hit the SGC. But yeah, with those tighter timeframes, it's inevitable that that's going to occur. And as I said, the information that's going to be provided to the ATO with the qualifying earnings, that's going to let them know what they're going to need to charge you from a SGC point of view. So just bear that in mind. Yeah, as I said, through DSPANs, we have requested a postponement and other changes, and that's kind of fallen on deaf ears because the superannuation industry is a lot more influential than the software developers, just because of the money that they have behind them. And yeah, so they want the money sooner so they can play with it longer. And yeah, so basically they've kind of overridden the software developers, where we've said, okay, we need 12 months to make the changes, and the super industry have said, oh, well, this is an employer obligation, so even if the employers need to, you know, send carrier pigeons with the super information to fulfill their obligations, it doesn't matter whether software is ready or not, because it's on the employers to get it right. Yeah, that's yeah, just a little bit of what's happening behind the scenes there, and as to why we're unlikely to see a deferral. From a Visipay perspective, we're pretty confident that very little has to change for SybizSuper users. It's just going to be doing it more regularly. Yeah, I mean, there's a lot of employers already that are paying monthly and paying their super monthly as well. So for them, it might just mean they've got to change the maybe month end payment to the date that they do their pays on. So for them, it's going to be pretty much business as usual. And for others, it's just going to be increasing that frequency of the super payment. So there, as I've said, we will be getting some changes to single touch payroll. That's not going to be anywhere near as disruptive as the change from STP1 to STP2, because the key change for STP2 was to make the framework more flexible, so that if things like this occur, the framework can handle those changes without having to release, say, an STP3 with wholesale changes to the framework. So so that pain we went through for STP2, that's kind of given us a little bit of an easier ride with this particular change. And yeah, so just a couple of the little bits and pieces as well. Generally speaking, OTE attracts super, and qualifying earnings definitely attracts super. We've talked about those exceptions a couple of times already. Yeah, as I said, the OTE flag, you won't see that in versions of Visipay prior to 2510. And the qualifying earnings, just to differentiate, that's what's going to be used to calculate the super guarantee charge if that becomes necessary. Previously, the super guarantee charge was applied on a wider notion than OTE. It was applied on salary and wages, so it was a lot more punitive because it swept up more of the pay items into what the SGC would have been applied to. So, so there is, I guess, some carrots with the sticks. And yeah, so Sybiz Visipay already handles the maximum super contribution base and the under 18s earning less, working less than 30 hours per week. We will obviously need to make changes for the super contribution base to change from quarterly to annual, and that will be done well ahead of the 1st of July commencement rate. So here's just like a little screen capture showing you the ordinary time earnings flag. There may be a slight tweak to that, just for that edge case of the bonuses commissions earned entirely on overtime or outside of ordinary hours, because technically that's not ordinary time earnings, but super will apply to it. So yeah, we maybe making a couple of little changes there. That's just pending the final legislation. So as I mentioned previously, when you install 2510 or above, we will look at that super guarantee, and if you does apply, we will automatically tick the OTE flag for you, and then you just need to sweep back through those pay items. Perhaps you're paying super on a pay item that you don't, or you're not obliged to, so you may just want to sort of flick through that and take off the OTE flag on those particular pay items. We can't give you advice as to that. The information is available on the ATO's website as to how to set up your pay items for STP, and also for whether super applies or not. So we just defer to the ATO website for that information. But it's I guess incumbent on you to review those pay items after you've upgraded. So even though you may be installing an upgrade for Sybiz Visipay that will cater to qualifying earnings, the actual reporting of it won't occur prior to the 1st of July 26. And you also need to make a little note to assess if you are using the maximum contribution base in your staff types. You will need to review those staff types prior to the first pay in the 26-27 financial year. Obviously, we're going to be communicating a lot more about this in the lead up, but just while we have your attention, we just want to sort of let you know the kind of things you need to wrap your heads around as we move toward Payday Super. So just wrapping up now on the Payday Super topic, just other things to consider. This is, I guess, outside of the software as such, but there's obviously impacts on cash flow. Pay frequency is something that you may wish to review in consultation with your employees. Your systems and processes as well. When new employees come on, you're going to want them to give you the information as soon as possible, so that you can that there is likely to be a little bit of wiggle room for new starting employees. In the draft legislation, there's going to be like a 2-week window there, but I won't detail that any further just in case that does change. But I guess at the end of the day, if you can have a new employee rock up and they've got their bank account details as well as their super details, then that will be making your life easier. And payroll is one of those things where often, and this is the difficulty, where the government come from the perspective of, they've got these massive payroll teams, and if something gets more complex, they just hire more people in the payroll team, and they kind of have this mentality that that's the real world experience out there in private enterprise. But we know the reality is that a lot of people that are processing payroll are perhaps doing other things within the business, or maybe in a part-time capacity. And so with the advent of Payday Super and the time pressures that come into play with that, a lot of these things are now something that previously you could just sort of if there was something maybe missed in your STP2 reporting, you could just worry about that next time you process your normal pay run. But Payday Super is really going to impact the availability of your payroll people. So have a big think about that as to how you're going to handle it, particularly if you do have part-time people. So if you have someone that comes in on a Monday to process pays and they're doing something else for the rest of the week, if on the Thursday they get a note from one of the super funds that they've not been able to match a contribution, they need to have an ear to the ground and ready to deal with that information when it comes through. So plan ahead for that as well. Another thing that does cause a little bit of an issue when people do things with their SMSFs and or self-managed super funds and don't advise their employers. That's going to be something where you're going to also need to be on your toes to make changes as quickly as possible to make sure that you're complying with Payday Super. So sometimes SMFs, they lose their complying status because they haven't been lodging their annual returns or doing some other nasty stuff. So that will mean contributions will get rejected. Sometimes they change their bank accounts and don't advise the employers. So that's another thing where you're going to need to make sure that those people with self-managed super funds are aware that any changes they need to let you know. Electronic service addresses is another thing we do see often when the self-managed super funds lodge their annual returns / tax returns. Their accountants or tax agents will update the electronic service address and basically cause things to break. So again, that's another thing where you're going to need to be a lot more nimble than you've needed to be in the past in terms of these kind of things and the impact on doing what is required within the relevant timeframes. So just to summarise, the legislation hasn't hit the Parliament yet, but when it does, you'll be able to go on the aph.gov.au website and put a little tracker against the Treasury Laws Amendment Bill 2025, SG reforms, blah, blah, blah. And from our perspective, we are hopeful that the building blocks are already in place. So apart from the STP2 reporting changes, if the ATO said, oh, we're actually going to be starting on the 24th of September, just like we're doing with the big changes to SCSL, we'd be ready to go if you're using SybizSuper. But yeah, that's obviously the caveat there is that we need to just wait and see what that final legislation is going to be looking like. So yeah, again, review your pay items for the applicability of super once you've upgraded, and et cetera. And yeah, SybizSuper, a lot of our Visipay customers are already using that. We are seeing some already moving from the small business superannuation clearinghouse across SybizSuper as well. And there was a massive change in the underlying technology there where SuperChoice, the provider that we deal with to provide that service, have migrated their platform for scalability at the end of August. So they're getting things ready for the increase in volume of superannuation traffic coming through that particular system. Because of the timeframes, we will be releasing Sybiz Visipay 26 in November. It's unlikely that, I mean, it's possible the legislation will make it through both houses of Parliament and get assent by that point in time, but the information coming through from the ATO as to what is required from our perspective probably won't be received by that point in time. So there will be an upgrade over and above Sybiz Visipay 26 that will be required to drive STP2. So, Payday Super. So if you are on an older version of Sybiz Visipay, yeah, definitely prepare to do that upgrade as soon as possible, and that'll just make that step to the final upgrade required for Payday Super to be a little step rather than a big step. Okay, so we won't actually take questions on Payday Super purely because it's still up in the air. So once everything's been finalised, we'll obviously, we'll have other further sessions on the topic as well. And as things become crystallised, we will then be in a position to answer questions. But even if you go on the ATO website right now and have a look at Payday Super, the information's quite scant. Yeah, until that information is finalised, it's a bit pointless sort of fielding questions on it. On to the next topic is the employee onboarding, which is available now for SybizSuper customers. So we'll just step through that and show you that particular process. So essentially where this comes into play and where it's something really worthwhile looking at is because you're wanting to get the information from your new employees as quickly as possible when they start. Employee onboarding is a good way of going through that process. So it's a reasonably simple process. So you just upload some basic information. So the upload mechanism basically starts with a spreadsheet with some very basic information. So it's name, date of birth, email, and tax file number. So you just upload a spreadsheet with one or many employees in there. And then that, as you go through that process, and we'll show you some screen captures as to the walkthrough there, the new employee receives an email, they create an account on the Sybiz employer portal, and then they step through their own onboarding process. Once that's done, you can then use that information and work through the setting up that information in a Sybiz Visipay as well. And then when you go to do your next SybizSuper contribution, that's when you get prompted to finalise that information. So Just stepping through that, the experience that you will have, you upload the new employees, and you can upload more information than this, but then there is some intelligent mapping as well. So if you call it first name, last name, DOB, email without the hyphen, the intelligent matching on the portal will know what you're talking about. But the natural names that it's expecting are as described in those 4 little bullet points there. Yeah, you upload it via the Sybiz employer portal. We'll be switching this on for SybizSuper employers within the next week, so don't go looking for this just yet unless you're already on board with it, pardon the pun. And then yeah, essentially yeah, it is the same portal as you're using for SybizSuper and STP. Once the file's uploaded, you just walk through this wizard, which is pretty quick and easy. And then yeah, I've just redacted the information on the screen there. Yeah, so don't worry about those columns being blank. You will see actual data there. And you can see the other bits of information that you can upload in the spreadsheet if you wanted to, but there's no real point to do that. It's just those 4 critical bits of information that are required. And you hit the confirm and send once you're ready to go, and then that is where the new employee, so this is just basically a series of screen grabs I've just grabbed off the phone. So just yeah, in this day and age, most people will probably be doing this on their phone anyway, so just showing you that it is doable. You can also obviously do it on the website as well. And so what happens is the employee, once they get the email, they click the link, and it takes them through this process where they need to supply their email address and date of birth. They will then get an authentication code emailed to them. They whack that in, so nothing surprising there. We do this kind of thing every day. Obviously, for employees that maybe English is a second language for them, they will need some assistance going through this process, most likely. And for those that are perhaps not as technically adept as well, will need some help. But hopefully for the majority of people, they can go through this process themselves with very little hand-holding. They create their own password, and once they've done that, they can then go through the process. So they just step through those 5 little buttons there, so provide their details, etc., and we'll step through that on the next slide. Yeah, so essentially the advantage of doing this through the SybizSuper portal that's powered by SuperChoice is SuperChoice have a really extensive database in terms of they're dealing with probably the majority of the market in terms of payroll software providers and also the number of employees within Australia. So so they do have a lot of information. So chances are the new employee that you have, unless this is their first job, there's a greater than 50% chance that they're already going to be in the SuperChoice database. And so what happens is the SuperChoice system will look at the employee information and suggest which super fund they should be selecting based on what they've used in the past. And there is also, so essentially what will happen is the employee will have the ability to, or they'll actually get suggested a fund to use. So you'll see on that leftmost slide there, it's might be a little hard to read depending on your screen resolution, but it's essentially saying, hey, we've identified an existing super account. Would you like to use that one? And you've got the choice to do so there. Bearing in mind that's probably not something that people want to do on autopilot, because they may have been on some other system from a super perspective for the last 3 years, and so the SuperChoice system may have some information from an employer 3 years ago, and they may have changed funds in the meantime, etc., etc. So it's not just follow the bouncing ball and do it on autopilot without thinking about it. If they don't want to use the fund, so let's just say it is that scenario where that's a stale fund, they've moved on to a different fund, then they have the ability to select a choice fund or a self-managed fund, or they can get their employer to do a check with the ATO through the ATO online services to check to see what stapled super fund is used. So the ATO obviously have a comprehensive database. They have the information out every employee and the super funds that they've been involved in. So the stapled super is essentially the ATO checking their database to say, hey, look, we've got some information about this employee. These are the funds that they've used in the past, and based on what they've used most recently, this is what we'd say is their stapled super funds. So this is the fund that they ought to use, all things being equal. So and yeah, I'll leave you to do your own investigation into what stapled super is all about, but it is available through the ATO online services. Hopefully, yeah, so essentially stapled super, I'll just, it's advantageous for people generally on the younger side who don't really care about super at this point in time. They don't have the foggiest what their super fund is or how much money they have in it. Yeah, so that they're not as conscious as perhaps those closer to retirement. And so stapled super just allows the employer to check which super funds that employee has been involved with in the past and suggest which one they should use. So yeah, pretty flexible and pretty easy process there to gather that information straight off the bat, rather than waiting for the employees to provide it at some other point in time. Okie doke. So once that has been done by the employee, when you go to do your next Sybiz Super upload, there's a process that it acknowledges that there is a new employee record waiting to be swept up, and by going through, they're going to be part of your next Sybiz Super upload. That's going to be the trigger to affirm that information and marry up that data with what you've provided from Visipay. So yeah, pretty quick and easy process there. And yeah, so we'll roll it out for Sybiz Super customers initially. And yeah, just to summarize the process, you upload the basic information via spreadsheet. The new employee gets an email, they create an account, step through the information, and then you approve the onboarding via your next Sybiz Super upload. So that is that process in a nutshell. And finally, just to round out the session, we'll talk about Sybiz Super. And yeah, I should just yeah, basically say if you're already using Sybiz Super, then yeah, chances are all that you need to do for Payday Super is use it more regularly. And obviously, yeah, you'll need to upgrade and make sure you've coded your pay items correctly for them to report correctly through STP2. But from a yeah, that aside, you've got the building blocks that you need already. So if you're currently using Sybiz Super, feel free to leave the session here. You can hang around if you like, but yeah, we'll be covering something that you're well versed on anyway. So yeah, thank you for attending if you are using Sybiz Super already and leaving us now. But for those that are hanging around, essentially there is a fee for the use of the Sybiz Super product. You'll find Sybiz Super information on our website under the customer link, customer Sybiz Super. You get all you need to know there. And we'll defer you to the PDS because someone might be watching this webinar in 5 years' time and hear me quote a price that's changed. So I'll refer you to the PDS, whether you're watching this now or in the future. That will tell you what the fee structure is. And you start the ball rolling with filling out the PDS. Okay, so the Sybiz Super solution in various guises has been used for over 10 years now, and that's the strength of our partnership with SuperChoice. They've been doing a great job for us for all that time, and that even predates the SuperStream days as well. Yeah, so in that sense, using the SuperChoice platform that uses the same backend as the STP reporting, so everyone will be used to that. And yeah, it's a pretty simple process. So once you've signed up, so you've read and reviewed the product disclosure statement, and you're happy with that, you sign off, etc. All you really need to do is yeah, you export your super contributions file, upload it to the portal, complete the wizard, and the payment comes out via direct debit. So yeah, really simple process. Having said that, there are sometimes exceptions. Sometimes someone will change to a different super fund and not tell you, and that's the first you'll hear about it when you go to do the upload. So there's things like ad hoc contributions that you can do to cover off those kind of exceptions. But generally, if people are all in the same super funds, it is really a simple process. So from a sign-up perspective, read, review the PDS, sign off on that. You can grab that from the customer's SybizSuper link. There is a, if you just go to sybiz.com, you'll be able to trace that through the menus there. And it uses direct debit, and it can also do SMFs as well as obviously the industry retail funds as well. So yeah, pretty easy process. So for those unfamiliar with it, what you need to do when you're ready to do your export, you go to the utilities menu, you choose the SybizSuper export, specify the date range that you want, and then if there are exceptions, so perhaps you've included a employee that doesn't yet have super funds set up, then you'll get an exception report will preview to the screen. But let's just say that's not the case and everything's all hunky-dory, then what will happen is the file will get produced. You can then click on the link that's provided on that window there to go through to the Sybiz Employer portal, upload the file, and go from there. So the process of uploading the file, yeah, essentially you click on the upload new file button that you see up the top there, then you select the file to upload and step through the wizard. And yeah, essentially once you get to the end of the wizard, you click pay and submit, and off it goes and does what it needs to do behind the scenes there. So just summarizing SybizSuper, you get started by going to the SybizSuper link on our website. Once you sign up, then it's merely a case of exporting the file from Sybiz Visipay, uploading to their portal, and then stepping through the wizard. So all pretty easy. And then it's a little bit different to STP2 in terms of there are some delays in the processing and getting the information back through the SuperStream messaging service to say that everything's okay, or hopefully not in too many cases not okay. So it is a little bit different to STP2, which is more of a fire and forget. With SybizSuper, you are going to want to sort of keep an eye on things on the portal as well. And a few people have asked about the SAF file. So essentially, the SybizSuper mechanism does use a SAF file. If you're not using SybizSuper, you can also at an additional fee, there is a SAF file export module available for Sybiz Visipay. So that's been in place for a number of years now. So there are customers that are doing things another way. So that SAF file is available separately. We are hoping that most people go to SybizSuper because we know that works, and it's been up and running for over 10 years for us. But if you are doing your own thing and you want a SAF export out of Visipay, then that is available as an extra module as well. So yeah, there we have it. That is the end of the show. So yeah, lots of information we've covered. Hopefully you've got some paracetamol handy, because it was a bit of a headache-inducing session. So apologies for that. Again, we're just passing on a message. And again, just to emphasize that particularly when it came to the Payday Super stuff, things haven't been finalised yet, so yeah, there's a big asterisk over everything that we've told you about Payday Super, but hopefully conceptually at least it's going to be pretty much bang on as to what we've covered, but there may be some little tweaks, etc., to keep an eye out. So if there are changes to what we've talked about today, we'll obviously emphasise those in our future sessions. So with that, thank you very much for tuning into this session, either live today or the recording. If you do have any questions, obviously we don't take anything technical or specific about Payday Super at this point in time, because it is still up in the air, but questions about anything else, just hit us up through our website contact form at sybiz.com. Thank you again for your time, and we'll catch you in the next webinar. Cheers, bye.